morning.
So given these factors then, what is your overall picture of the markets right now, and how is this affecting investor confidence, do you think?
Well, one of the things I think is surprising is that given we've had some quite serious geopolitical concerns, not only in Iraq, but also in Ukraine for some time now, and all of this sort of noise and a bit of uncertainty about when exactly rate rises happen, that in a way markets have been so relatively robust against those headwinds, because those are two pretty major issues that in the past have caused quite sizable market movements.
Absolutely. And given these geopolitical concerns that you talk about and the threat of rising interest rates, what are the sectors that you're sort of steering clear of at the moment?
Well, I think you have to look at them separately. I mean, I think that the geopolitical, what's been, really interesting this time is that the US has really upped their oil production, by 1 billion barrels last year, and that's meant that the oil price has been quite stable. And that's obviously, quite positive at a time where we've got this uncertainty about when exactly rates rise. So we're sort of relaxed about, sectors that have got exposure to high oil prices, and we consider that US supply to sort of continue to come online and be quite strong. But undoubtedly low rates has caused an issue with sort of liquidity, and we know when there's a lot of liquidity you can have bubbles. We remain quite cautious on things like real estate in particular, and obviously those shares have reacted in the UK to sort of Mark Carney's comments. Was it only a week ago? But it feels like even longer, because I think a lot of liquidity has gone into there. When I talk to the banks, they've been able to sell a lot of their assets quite easily to investors hunting for yield. And still, I think in the emerging markets, and the UK is a stock market that's very exposed to emerging markets, and infrastructure as well in the emerging markets, we remain quite wary of where companies have got exposure there.
Mm-hmm. And then conversely, which sectors are you favouring? What are you advising your investors at the moment?
Well, I think actually, the forward-looking indicators are good, and capacity utilisation in the UK is quite good. And I think there are some interesting names in the support services that companies will start to invest or outsource and start to look to grow again. And a lot of these companies have had, in the support service sector, have had changes of management as they really look to maybe address historic problems. And I think there's some interesting developments there. You can point to sort of new management teams at the likes of Serco and De La Rue. And, where you have a management change and where they're exposed because you've got good forward-looking indicators, I think those are very interesting.